In this video, we're going to be talking about the 1031 exchange program, what it is, how it works, and how you can take advantage of it to save significant amounts of money when you are selling an investment property. I'm also going to dig into some fantastic properties and introduce you to some great places where you can move that money and utilize those savings. So let's get started. Hi, I'm Jerry Barker, founder of the Jerry Barker Group, a real estate investment brokerage firm based here in Central Florida. We have helped many clients from all over the United States successfully purchase investment homes here in the Orlando area, and many of those are 1031 exchanges. So today I'm going to give you an insight into all that information on what a 1031 is, how it works for you, some of the information that we've found out as we've been doing them throughout the years, and also give you some great examples of opportunities here in Central Florida, so you may consider that for your target property for your 1031 exchange. I sat down recently with Florida real estate attorney Lou Oliver, and we were discussing the 1031 exchange, and here is exactly how he described it. 1031 exchanges.
All right, so the U.S. tax code has a really interesting provision that's kind of nice for people who invest in properties. It's of no use, has no significance to people who are buying homes to live in or your own vacation property, but it has a lot to do if you're buying a property primarily for investment purposes. And what the code says is pretty simple. If you bought a piece of property and then sold it and made a big profit from it, normally you would have to pay a capital gains tax on the profits, kind of income tax. However, the U.S. tax code allows you to say, you know what, it's too early, I don't want to pay that money, it's kind of, this is how I'm supporting myself, I need to have investment income for my old age. So what I'd like to do is I'd like to take the money that I made from the sale of this property, and I'd like to go buy another investment property, maybe a more expensive one, maybe move up the chain a little bit. And the federal government says if you do that the right way, if you hire a 1031 exchange company and send the money through them as what's known as an intermediary, then you don't have to pay any taxes on the profit you made on the sale of property A. You don't have to pay taxes until you sell property B. And frankly, if you then sell property B and take that money and put it into property C, you don't have to pay anything until you pay property C. So you can do this all day long, forever and ever and ever, until at the very end, when you finally say, now I need the money from the property that I've sold and I'm not going to put it into a new investment property. At that point, the IRS comes back and grabs the profit that would have been due at all the prior transactions and adds it all together and so forth. So it's a great investment tool for people who invest in real estate, who want to move up and continue turning their money over. 95% of the time, they're putting it into more expensive properties. They're moving up their basis and increasing their assets. So really good tool to use, and it makes sense.
So what exactly is a 1031 exchange? Well, let's use an example. An investor who purchased a property for $500,000 is now under contract today to sell that investment property for $900,000. That is a $400,000 profit. Unfortunately, it's also a $400,000 liability for capital gains. Depending on which state you're in, capital gains can be anywhere from 25 to 40%. Generally speaking, around 30% is average, so for a $400,000 profit, the IRS is going to come looking for about $120,000. And you don't want to have to pay that $120,000, so there's a way to not have to do that, and it's called the 1031 exchange. Very simply put, you are in the process of selling your current investment property. You go looking for another investment property, and you transfer the proceeds of the current investment property into the new investment property, and you don't have to pay any capital gains tax on that money. Really nice. So let's talk about the timelines. Let's get back to Lou and Jerry and their discussion on the critical timelines on a 1031 exchange.
And we'll bring Lou in a second here, because I'm sure he deals with the qualified intermediaries. But the timelines are really important. There are no extensions. If you don't get it done 180 days,
done. You owe taxes.
Yeah, you're paying, and roughly depends what state you're in, and capital gains tax, its probably averages about 30%. So if you're profiting $400,000, you're looking at $120,000 in capital gains, and if you miss that by a date, One day, Uncle Sam, $120,000 goes.
The good news is you'll be very popular with the IRS. So if that's a consolation to you. And the rest of us taxpayers, thank you for your negligence because you've lowered our tax bills.
There you go.
Thank you kindly.
So make sure that does. Don't you be the person that's lowering
my tax bill.
Yeah.
So let's reiterate those timelines. Very important. You have 45 days to identify up to 3 target properties. 45 days, 180 days totally closed. Not 180 days after the 45, 180 days from the sale of your investment property. That's the moment that the clock starts ticking. As soon as you close, you have those 180 days, 45 to identify, 180 total. That is your in complete time for your 1031 exchange, and as Lou says, if you go over by as much as a day, it's over. You lose your 1031 exchange. So absolutely critical, you do not go over those days. So like kind exchange, very interesting. Broad spectrum of options in a like kind exchange, but how do you get the exact detail? You may have a very unique investment, you may be buying a very unique investment. Do they fit? Do they match? Well, the person to answer those questions for you is the qualified intermediary. As well as holding the escrow funds, their job is also to give you all the information, all the advice to make sure that your 1031 is processed correctly. So let's listen to a little bit to Lou and what he had to say about the 1031 qualified intermediary.
You don't want to pick the wrong qualified intermediary because, as every title companies, realtors, you name it, there's good, bads, and indifference. We are not all created equal. So do your research, make sure they're insured and they're bonded. Even better still, kind of like what we talked about with the notary, if you use Lou's specialist, then you're probably pretty safe. You won't be buying watches. You
will be absolutely safe. The 1031, our underwriter, which is the company that provides the backup insurance for the title insurance, it's their policy. I'm just the agent for the policy. They have their own 1031 company. It's a $75 billion company, so they have tons of resources, and they don't typically get scammed and that kind of. And they're very responsive to us because we send them a lot of business. So if you have a choice, call. And their fees are reasonable. The fees do vary. In my experience, they don't vary drastically. It's not like one will be 10 times more than another, but they could differ by 50 or 80% in some cases. So shop around a little bit on the fees, double check, ask your realtors for recommendations, and also the title company as well.
So how does the 1031 process work? Well, you have your current investment property, you're under contract to sell that property, you'll have set up your 1031 qualified intermediary. You'll make sure that they're in the loop. As soon as the property closes, the money must transfer directly from your current investment over to the escrow account of the qualified intermediary. Exceptionally important. You cannot touch the funds. If you touch the funds in any way, your 1031 will be avoided. So do not touch the money. Make sure it goes directly from the closing agent to the 1031 intermediary. At that stage, you should be in the process of looking at your new properties, hopefully even under contract for your new target properties. When you are closing your new target properties, then the 1031 specialist, the qualified intermediary, will be working with the closing agent for your target property, and when it comes time to close, your qualified intermediary will transfer all the funds from the escrow account directly into the closing agent for your target property. It's very simple. It has to go from one to the next to the other, and we have to make sure that at no point along the way you touch the money, because you will be then liable for that capital gains tax. You don't want to do that. One of the great things that happens when you're sitting talking with people and you're going backwards and forwards with information on different subjects is great little pieces of information suddenly just bubble to the surface, things that you probably wouldn't think about or would talk about generally while you're looking at and listening. And while Lou and I were talking, one of the items come up that will allow you to use all of the 1031 exchange, so you have no out-of-pocket expenses at all. This is a great little tidbit, and not everybody knows about this. Let's listen in.
When you're buying a property, you're going to put down an earnest money deposit, and Lou talked about that earlier on. You've got 3 or 4 days to get that into the title company. That's cash out of your pocket. That's not coming from your 1031 exchange. That's money you put up front. If you're going to use all of your 1031 money, then you really want to get your cash back and use your 1031 money back up. So what you can do is, to say your earnest money deposit was $10,000, what you can do in the house you're buying is, let's call it $600,000. You can have $610,000 sent from the intermediary.
And then you get your $10,000 back.
He'll write you the check at the back, so you won't have. A lot of people don't realise that they can actually get that cash back.
Literally, you don't have to put a cent into. If they do it right, they don't have to put a cent of the money out of their pockets. They can use 100% of the money from the intermediary.
I'm sure you have a lot of questions in 1031. I noted down 3 of the most popular common questions that we do get asked on a regular basis. We are not a 1031 intermediary, and I would very strongly advise that the 1031 intermediary is the person you want to check all that information. That's what they do. They have the latest and the greatest. They're up to date with all the rules, etc. But a lot of these items are generally common, and we hear them a lot. And I'm going to give you the top 3. Number 1 is, can you take cash out of a 1031 exchange? Well, you can. It's called a partial 1031. And let's go back to our example of the investor who sells a property for $900,000 that originally purchased it for $500,000. Let's say that he's only spending $800,000 of that $900,000. There will be a $100,000 difference. That $100,000 you can pull out, but of course you are going to get charged those high capital gains taxes on that $100,000. So Uncle Sam is going to come after you for the capital gains on that, but you can do it. Number 2 was, what is the 1031 boot? That's a question people ask a lot. The 1031, the boot is actually that $100,000. That's what it's called. If you're taking the difference out, the difference between the amount of money that you have in your 1031 escrow and what you are purchasing for on the other side, your replacement property, that difference would be the 1031 boot. And the other question we get asked a lot is about a reverse 1031. Yes, you can do a reverse 1031 exchange. What is that exactly? Well, it's the other way around about. You buy your second property, your target property first, and then you sell your investment property, and then you have 180 days to sell your first property. So a lot of the details are almost identical, and again, these are all great questions to go into detail with your qualified intermediary. So make sure if you do have any questions, you reach out to them and ask them those questions. Lots of little bits and pieces, but they'll have all the answers for you. Alright, so we have found that the 1031 might very well work for us. We have ourselves an investment property, we're ready to sell it, we don't want to get charged the capital gains tax, we've got it all together, we understand intermediaries, we understand the things we shouldn't do and the things that we should do, but we still have to find our target properties. That's next on the list. So where do you look? Well, there are great investment opportunities all over the United States of America, but one of the most popular is right here in Central Florida, Orlando, the family destination capital of the planet. More short-term rentals, more people come here. 75 million people a year coming to Orlando, and they need a place to stay. So we have an absolutely booming, fantastic short-term rental market going on here in Central Florida. How does that make for a great investment? Well, first of all, it is turnkey. You don't have to put any money into it. Your 1031, all of that money can go in there, nothing out of your pocket. You're buying a property that's already furnished, it's already in a rental program, it's already generating revenue, it's all happening, it's all up, it's all running. You can just swap straight in, boom, you're off and you are ready to go. But what makes it most attractive for the clients that come here looking at Orlando for their 1031 exchange is the personal use, the lifestyle investment. You can come here anytime you like and spend a long weekend or a week or a month or whatever you like in your vacation home here in Orlando. Certainly one of the most popular aspects of owning a great home here. Unlike our friend who owned the mineral rights in Texas, let's face it, mineral rights, you can't have an awful lot of fun with mineral rights, but you can have a lot of fun here in Central Florida with Disney, Universal Studios, and the Space Coast, and the beaches, and everything here in Central Florida. That is why Orlando is one of the most popular destinations to put your 1031 exchange into. Alright, so we're ready to get started. You understand the process, you understand about 1031 exchanges, you understand what not to do, what to do, and where to do it. We'll have all that information, and you quite like the idea of an Orlando property. So what's next? Next up is you want to reach out to us. Let's get started. Let's talk about your 1031 exchange. Let's get that process going. Let's find out if Orlando is a suitable location for your 1031 exchange property. Reach out to us, 472-868-170, or at the website www.jerrybarker.com/1031-exchange. That page alone has some fantastic information and shows you a lot of the great properties that are available to you right now, live every day, updated every hour. 1031 properties for you to see. Make sure that you stop by and take a look at that. The cost for all this great information to you is just one like. I'm going to finish off now showing you two absolutely magnificent properties that are in the short-term rental program, making great money for their owners. So you can see a property. The first one is around $600,000-$700,000, and the second one is around $6-7 million. Absolutely gorgeous, insane properties. So let's go and take a look, and thank you very much for watching.